Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is Stock Trade Ideas for the week of January 12th, 2015. We're going to take a look at the trade ideas that I exited last week, one I'm currently in, and one new one that we're looking at for the coming week. Okay, we're going to start off here with YY. Got in YY here on the 24th, and we did not hit our initial target that we had down here. So actually didn't get to take, profits on half the position as we normally try to do, and got stopped out here for a loss on the trade. Just did not get the follow through, and we still could, YY could still be doing some kind of ABC in here, corrective action. But you just never know, because you're in this is a bigger corrective mode that's going on with YY, I believe. But I still think that C, if this is A, B, C, that it's going to come back down here because this is working a large flat correction. So we'll see. And Friday, it started to act like maybe it wants to come back down again. Kind of an outside, let's see, the up day high 70.69 on Thursday, 70.80. So an outside down engulfing bar on Friday, which is somewhat bearish, So we'll see whether or not we continue to come back down here or not, and whether or not I get a setup I feel comfortable with. But right now, this trade did not work out very well for us. So that's it on YY. The next one is on CREE. CREE, we looked at the entry, was at the close here on the 26th. Got a little bit of sideways movement for a few days, and then got the downdraft, and we exited here for half the position, and then exited, and then we actually got stopped out at break even on the second half here. And hindsight being 2020, what I'm going to be looking at doing, just FYI, especially for my subscribers, what I'm going to be looking at in the future is if the ADX is less than 20, which on this day it was 19. So here it was 18. If it's less than 20, I'll be exiting the entire position. I already told you that if it hits my target the very first day immediately, I'm going to take all of it off, just because, it's like a, immediate windfall, and I'm not going to sit back and, well, that happened right here, actually. We were short. We got short in this little move and had this big wide bar on this day here, and I exited. Yeah, I could have got a little bit more, but, so what? Down here, the way this action happened, I will be, in the future, exiting the entire position on this day. And, we had a 17% profit. If I would have exited the entire position, it would have been a 30 plus 34% profit on the trade. So that's the difference that it can make. All right, the next one is Twitter. Twitter, we got in here again at the close of this day, which was the 29th. Thought we were going to get more of a downdraft. If you could, I thought we were getting a swing move to the downside, and then it just kind of stopped. Now, Twitter had been, it had one counter trend move here, another one here. This was kind of the third one. So maybe I was pushing my luck a little bit. And so what happened was, on this day, when I saw, this was the 5th, and that was Monday. That was when we had the big down 300 and some points, okay? When I saw that the Dow was down over 300 points, and this is what Twitter did on this day, I said, I'm out at the end of the day, because clearly Twitter did not want to go down. And then look what it did. Okay, so this was very fortunate for us, and I think it was, I think we had like a 3% profit. So basically it was a wash on the trade. Caterpillar, this was a nice trade. I really like these kind of trades. I like these kind of, you get a counter trend move, you get a re-entry, the 10 EMAs below the 21 simple moving average, below the 55, below the 233. Everything is aligned to the downside. You get this re-entry right here, and then you just ride the downdraft. And got out here, hit the target on this day, And again, all the details of the trade ideas are on my trade ideas webpage. You need to be a subscriber to have access. It's very simple to do. Just first name and email, and you can subscribe, and then you get notices of when I've got posts, and you can download the free PDF I've got for you also. So, but that gives you access to the Trade Ideas webpage. And so we got out of half the position here, and then yesterday I was watching this, and it started trading up below this low in the afternoon when, you know, I thought it was going to continue to downdraft, and then it faked me out a little bit. But here was the other thing I was watching. You notice how the closes on this day are well above the low. So the bulls were winning in the afternoon. The bulls were winning in the afternoon. The bulls won in the afternoon, and the same thing started to happen here. But we'll see. This is going to be real interesting to see how this turns out, because the ADX on this day is 31. So still, it's in a really nicely downtrend. 30 here, 30. I'm looking at my data box, 29, 27. So the ADX is increasing, and it's very strongly to the downside. So I may have been a little premature trying to get out. You know, we'll find out. You know, Monday morning quarterback, we'll find out next week. But, you know, I can't complain, because when I exited both pieces, this one here, first half, second half, end up with like a 70% profit margin on the deal. So that's nice, and you know, you can't complain about that. All right, Best Buy. This was one where we got whipped a little bit. Okay, so we had an entry here, thinking this was going to roll over because we were getting some divergence in here. It was showing up on the directional movement indicator. It was showing up on the demand index. It was showing up here on RSI. But in reality, when I look back on this, we really didn't have super strong. I mean, like, we had one day or a couple of days at most where the price, and actually only one closing day, higher than this closing day here. So it wasn't like it was a ton of trading activity that created the divergence that happened, although this move wasn't really validated. And so then we got, I got an entry right in here on this day. And then what did it do? It counter trended with the market bounce, okay, on here. And then Friday came back down. So I had my stop set. We got stopped out here on Thursday. And, that's the way it goes. And, 2020, I'd do it all over again the same exact way. So that's just the way Best Buy worked out on that one. And again, I mean, here's the thing: when you take a move and a setup against trends that are trending up like this, the 55, the 21, that type of thing, to the upside, you have to have divergence. I had divergence, but it still didn't work. So that's what's going to happen. I mean, it's like I've talked about before, there is no holy grail. Things don't work 100% of the time. All right, GLD. This is one I saw as I was reviewing things on Friday morning. And so the trading day had already happened, and I was looking at this, watching some action, and I thought, this is really starting to look bullish. And I hadn't really focused on GLD and gold a whole lot lately. And then, you look at this and you see this nice head and shoulders bottom in here. And I had, I'd looked at GLD months ago and clearly had this 5-wave pattern identified to the downside. Look at this big, messy corrective action sideways here for a wave 2. And then we got this strong wave 3 down, which is classic wave 3 type action. And then a triangle, which is, always, triangles are always in impulse moves. They're always in the fourth wave. So that's what really signaled that this was a fourth wave that was happening. Okay, then we got the 5 waves down here. And so now, we're starting this counter trend move of some kind, and we're getting this classic technical, it looks like a classic head and shoulders technical pattern right in here. Now, when I look at this from an Elliott wave perspective, this is kind of a messy wave 1, and honestly, I'm not really sure what we've got in here. I mean, you could look like a 1, 2, some kind of 3, 4, but 4 can't overlap 1, so I'm not really sure. And we could be like a diagonal, like a leading diagonal, which I have a tendency to think that's what's really happening with this move. It's something like this. But you know, that being the case, let's see. Let me pull this back a little bit. Okay. That's what I think's happening. And then we get this, you know, pullback here. And actually this is kind of interesting because I looked at this earlier and this is a little over 61.8% pullback. And you like to see for a wave 2, you like to see a deep retracement like that. And that's, you know, typical 50 to 61.8 or greater on a wave 2 pullback. So I'm starting to think that this is a wave 3 that's going to go right up through this neckline here and start, you know, continue this move. So anyway, got in on Friday, and so the details of this are out on the Trade Ideas webpage too. So we'll see if gold is getting ready to run for at least some kind of counter trend move, and who knows where it's going to go. God, you know. We know there's enough stuff going on between crude oil and bonds and you know, everything else. So it may be time for the metals to get in gear again. Now here's the other thing. I didn't see something on SLV that I got interested in, but on silver Wheaton, this is my trade idea for this week, for tomorrow actually. You know, I think, again, we had some kind of 5-wave move here, which is typically, as an ending move, you want to see a 5-wave move to end the major move to the downside. And now I think we're starting a move to the upside here. I like this action. I like the fact that the 21's above the 55, and now the 10's breaking above the 21. We're aligned. We all are below the 233, but that's okay. Because, you know, these moves, you'll see if I back on out of this. I mean, look at this. The 55 is below it too. Now here, this is even stronger than this was because the 21 is below the 55 here. The 21's above the 55 here. So it's more like this move. See how the 21, the blue-gray line, is above the 55? And it's starting this counter trend swing. So this is the kind of move and kind of pop that you could see coming out of this thing with these moving averages aligned. So that's what I'm looking for. We'll see if we get it. Let me back out of here, and you can see, probably, let me go to a weekly chart. If I go to a weekly chart, you can see the big moves that have occurred over the year. So this over the years. So if you go from the low at the end of 2008, up here to the high in early 2011, this looks like choppy sideways corrective action, okay? And I haven't measured to see what it's corrective. Sometimes I get caught in my Keltner channels here when I do this. We'll see if it works. There we go. Okay, so we're actually a little bit greater than 61.8% correction of this entire move here, okay? So when I see a 5-wave ending move right here, and we've had this kind of messy, and I haven't sat back and tried to figure out, you know, exactly what this is in terms of a wave count. But this makes me feel like the odds are increasing that maybe the corrective action in silver Wheaton is over with. So we'll see. We'll see what kind of price action we get coming out of this thing. Let me get rid of this. And let me go back to the daily. And there we go. So again, details are on the Trade Ideas webpage, and we'll go from there. All right, everyone, have a great week this week, and we'll talk to you again on Tuesday. Oh, by the way, and I should put a note of this on the website. I can get a drink of water here. Last week I said that if the market moves, 1% or greater, I'll go ahead and put a market update out. Well, it turned out that I ended up putting a market update on every off day. And so last week I had market updates and or technical analysis regularly scheduled videos every day. So Monday, Tuesday, Wednesday, Thursday, and then on Saturday. So I think what I'm going to do is maybe I'm going to up that percentage. If the market moves 1.5% or so, an unusual move, then I'll put something out. I'm really hesitating also to be sending emails out every day. So if I do put a market update out, I will tweet it. So make sure you're following me on Twitter at @JoeHenches. And so I'll tweet it and I'll post it. But I won't be sending emails out every time I pop a little market update out there. Okay. I just, I know when I follow people that I follow, and, if I get too many emails, sometimes, it'll bother me. And so I know how that feels. So I kind of resist trying to do emails, every day kind of thing. So anyway, wanted to pass that on, and we'll work through it. All right. Have a great Monday, everyone. Monday, Tuesday. We'll talk to you Tuesday night.